Ritesh is looking after ETF products. Earlier, he had experience with ETF products and technical research. He is responsible for managing and maintaining passive products such as gold and silver for Mirae Asset Mutual Fund. He is also one of the fund managers in Mirae Asset Multi-Asset Allocation Fund, where he takes care of the commodity part. He has been associated with the firm since 2022. Prior to this role, Ritesh was associated with Aditya Birla Money, India Infoline, Ventura Securities and others, where he was technical research analyst in commodities. Welcome, Ritesh. Thanks for accepting our invitation to share your knowledge with our subscribers. Okay, without further delay,
worried about my connection.
Okay. Without further delay, probably we will go ahead with some of the questions. Today's topic is: should you buy gold now? In this, a lot of people are anxious about gold prices, particularly in this part of India. People love gold. Everything is big in South India. Jewelry shops are big. Gold loans are big. A lot of gold loans are being, given, disbursed. Gold investments are big, and gold in temples are also very huge. To start with, can I put you a question asking, has gold reached the peak? Why I am asking this question is, a few months before, somewhere in January, let me go with the 22 karat gold, because that's what people understand easily or can resonate easily. 22 karat gold touched more than 16,000 rupees per gram. Today, as we speak, it is about 14,000 rupees, 22 karat gold per gram. So approximately 10, 12 or 13% down. It went down earlier. So whenever it went down, people said that the 22 karat gold could go down to 10,000 rupees, which is like 80,000 rupees per sovereign. So is it possible, is there a possibility for gold to go down to 10,000 rupees per gram, ornamental gold?
Yeah. Thanks for the warm welcome and very good morning, everyone. So as we are also aware that South region part of India is all about gold, and it is known for gold jewelry and temples where all the golds are stored over there. And if I'm not wrong, more than 50% of the gold is in the South region, if I'm not wrong. Correct me if I'm wrong.
Yeah, could be. Yeah.
Yeah. So to answer your question, see, we have seen last couple of years where how gold prices have rallied. So it is we can say that it looks expensive at this moment by looking at the current price, but at the same time it is very natural as well to be anxious about it. Okay, but if we say that gold has made a top, then it will be very much difficult to say at this moment, because for that there needs to be a very calm global environment, strong dollar, as well as the high interest rate. And if we look at the current environment, geopolitical issues are there. We all are aware that what is going on into the international market, how wars are being placed. One war is stopping the another war. It would be very much difficult to say whether gold has made a top or it will go down from here, because as you have already said that from 14, I mean, your question is that whether it will go down from 14,000 per gram to 10,000 per gram. So as I already said that to happen that particular thing, the global environment needs to be very calm, and which is not happening at this moment. Okay, so I don't feel that or I'm not supporting the fact which other reports are saying that gold has made a top or bottom, because we have seen that how in the historically how gold prices rallies, then stays calm, corrects a bit, and then again resume its current trend. Okay, so it is happening at this moment as well. Gold last year have rallied a bit. In fact, it has rallied quite significantly. and after that, currently it is just consolidating its prior up move, and or we can say that it has taken a pause, and from here on, the if the current geopolitical environment stays like this, then I believe that gold should continue its uptrend in the coming years too.
Oh, okay.
Yeah.
So,
And just to add this, in our term, we always say that gold has always rewarded the patience. So whenever you have the patience, gold will always reward you.
Okay. So, no, really, as long as geopolitical issues are there, so still gold could go up. I mean, there is possibility.
Correct.
So, to understand what are the main drivers of for gold and how far gold can go. Let us first talk about the drivers of gold.
Okay. So think of it like an insurance. Okay. So gold goes up when people feel unsafe. Okay. So these are the major factor by which gold moves up or goes down. So first is interest rate, US interest rate, geopolitical escalation, then weakness in US dollar index, central bank buying, domestic demand, growing Chinese demand, AUM growth across global ETF, environment and other factors. We believe that there's a high probability that it would give a good amount of returns. In the past, we have seen that earlier people used to consider gold as a just to hedge their portfolio, but now it has emerged as a return generating asset as well, and people are now viewing gold as a return generating asset as well. Okay, so going ahead, we believe that gold should go up, and how far, that nobody can answer that question. But yeah, by looking at the last year's return, I think gold should really do well.
Okay. The why I asked you this question is because there are investment banks like JP Morgan Chase. They have given a higher target of say like $6,000 per ounce by the end of this year, and some other banks have given like $5,000 per ounce. So is there a possibility that it can touch? I mean, either way. Say like right now, from an international perspective, it is $4,700. So could it go up, say like 6,000, which is like 30% or 25% from here, 27% from here approximately? Do you agree with that view, or you are neutral in your views?
See, as I've already mentioned, that we are, as a fund house, we are bullish on this commodity, but if it goes to $6,000 or not by this year end, see, nobody can say that. Again, I'm saying that because if we are sitting in 2024 and expecting gold to touch $5,500 per ounce, that would be next to impossible. But gold has delivered that amount of return, and by looking at the geopolitical condition, I also say that if this condition remains as it is, it will like there are likely chances that gold to move to that level, 6,000 level, which you have said, and other broking houses or other international banks are suggesting. But I feel that if this condition worsens, and if there are as we all are aware that US debt burden is increasing day by day, currency printing is happening, geopolitical issues are escalating day by day. So today there's some war, tomorrow there will be some other war. Okay, so in this scenario, saying that gold would go up till $6,000 only, that is not the case. If this condition worsens, then it can go up to $7,000, $8,000 as well. But if this condition, at the same time, if condition neutralizes and remains calm globally, then I think gold should remain in this range also. So there's nobody can say that whether it will go up to 6,000 or not. But yeah, we are, as a fund house, by looking at these current fundamentals, we are very much bullish about it.
Okay, you are more positive on gold, so to say. So yeah, that way that is good. And
in this scenario, should investors think of increasing their allocation to gold? So we usually say, okay, keep 5 to 10% of your portfolio in gold. Should they increase the allocation if it is really positive?
Okay. See, to increase their allocation between any asset class depends totally upon client to client, how their risk appetite is, what are their future targets, what are their age, and for what goal they are investing. So before taking this call, they should go and ask their financial advisor prior to taking this decision. But an ideal portfolio looks like 10 to 15% mix of gold and silver both. So if they have not bought any gold, they should add gold at this level as well, and gradually whenever gold falls, so that we call it buy on dips. Okay. And for those who already have gold in their portfolio with reasonable sizable amount, then I would say that they should not the falling knife. They should, if they have got some more money, directly allocate some part of their funds.
Okay. And right now, between gold and silver, which one do you prefer, Ritesh?
Okay. See, this is a good question, but you should understand that both of these commodities have different characteristics. Okay.
Ritesh, sorry.
Gold, which my portfolio when I want to
Ritesh,
environment.
in between
Hello?
you got disconnected. Could you repeat that?
Yeah. See, both of these commodity have different characteristics. Gold, if I look at gold, that is I believe that is an safe haven asset, and people around the world consider it as a safe haven asset. Okay. We buy gold when there is geopolitical issues, uncertain environment globally, some war kind of a situation happening. Usually people rush towards gold. While if you look at the silver is also considered as a safe haven asset or precious metal, but most of the people are not aware until last year that silver is also an industrial metal. Okay. More than 50% of its demand comes from industry, solar panel, EV, AI, all these things. So whenever there is growth happening into the economies, silver tend to rise. Okay. So rather than deciding between gold and silver, we should ideally combine these commodities and have a balanced portfolio where both of these commodity balance out.
Yeah, both of them say like 50-50, something like that. That is the investment part that you are talking about.
Yes. So when I look at gold is safe haven asset. Okay. When I look at gold is a stability, and when I look silver is volatility. So if some client likes volatility and loves volatility, and if they are willing to time the markets, they should ideally have more allocation to silver. And if some client wants stability into their portfolio, they should be more tilted towards gold.
Okay. And can gold beat equity and debt in the next 12 months under this scenario? What are the current condition? Because last year it was a fantastic return for gold, and could that repeat or a part of that repeat this year?
See, as I've already said, that gold should not be seen as a replacement to any other asset class. Okay, there should be a balanced portfolio where an ideal portfolio looks like combination of debt, commodity, equity, precious metal, all of this. Okay, and to coming to your question, whether in 12 months time, will gold outperform other asset class? Then just let me just retry to share my screen. I've just got some numbers.
Now, when you share the screen, then it becomes a little messy. So we can go ahead with the conversation.
Okay, wait. I'll just stop it and I'll just open it to my page only. Wait.
Right. Yeah.
See, if you look at the returns, 15-year gold return is 13.6%, while Nifty return is 11.6. If you look at the 10-year return of gold, that is again 13.3. 5-year return 25.8 versus 11.7. 3-year return. Okay.
Ritesh,
So
sorry.
all of these times.
Ritesh, can you repeat that? Sorry, in between you went out.
Yeah. Should I start from 15 years?
Yeah.
Yeah. So 15-year gold return is is around Nifty return is 13.3%. 5-year return for gold is 25.8% against 11.7%. 3-year return for gold is 35.7% against 11.2% in Nifty. And 1-year return, if you look at gold, it is 59.5% against Nifty's minus 0.3%. Okay, so look at the difference on all of this time frame. Gold has easily outperformed equity. So if I say that that gold should outperform in the next 12 months, it is no harm by saying that, because the number says that. What I suggest is that don't look at my words or don't listen to anybody else. Just look at the numbers. How tremendously gold has performed well during all of this time.
Okay. So I mean, to put it shortly, I mean, it may beat, but anyway. So because in the last, because of the last 1 or 2 years run up, things have really gone up for gold. The returns have gone up. So that's good. And just let me mute, and then you can unmute, Ritesh. Sorry about it. Ritesh, you can unmute. I mean, one of the reasons for run up in gold has been. Oh, sorry, someone is. Just a minute.
Could you
Yeah.
repeat the question?
There is some noise there. I request everyone to unmute yourself. Ritesh, let me mute again. There is some noise out there. You can unmute, Ritesh. Sorry.
Yeah.
Will central banks, one of the reasons for this run-up in gold prices is the purchasing of gold by central banks, all the countries. So will central banks start buying gold again?
See, as per my understanding, central bank has never stopped buying. Okay, if you look at 2010's number, from 2010 to 2025, none of the years central banks have, central banks are net sellers. In all of these years, central banks are buying. And in fact, if you look at the data from 2022 to 2025, central banks are even buying more than 1,000 tons. Okay, while the average stays around 500 to 600 tons per year. Okay, so in the year 2025, this number has gone down to 863 tons. But if you look at in value terms, it will surpass all of these 3 years, because we have seen that how in the year 2025 how gold prices have rallied. So the overall number to the year 2025 is relatively higher than the year 2024 or 2023. So as per my knowledge, central banks are continuously buying, and it may take a pause, but in the past we had seen that whenever central bank buys, they buy it for some tactical reason. Okay, they have a good solid reason to buy behind it. because they don't, generally trade, buy at lower levels and sell at high levels. So at this moment, you all are aware that how some bigger economies like China, Russia, India are, reducing the dollar dependency and reducing their dollar, US dollar treasuries, and increasing their gold reserves.
Okay.
If
Okay. So
my screen were visible, I would have, showed you how China are reducing their US treasury and increasing their gold reserves.
okay. Yeah, generally, central banks might continue buying. That's what we hear from you. Okay, and generally we say that during war times, gold prices goes up. But in this scenario right now in US-Iran war, whenever whenever they stop war, gold goes up. When they start war, no, it is the vice versa, ulta. Ulta is happening usually. So why is it so?
See, we have, you have rightly said that gold tend to perform well when there is, war kind of a situation or uncertainty into the global environment, and which is happening at this moment as well. But what is more happening to this, we have seen that how gold prices have, run up in the year 2025, and war started, if I'm not wrong, this year itself.
Yeah, February 28th. Yeah.
Yeah. So in order to invest more in the war kind of a situation, people are already, I mean, there are multiple reasons. Okay. So this is one of the reasons that people were already set with good amount of profit in gold. So rather than investing to some asset class where there are uncertainties into the global economy and there are chances that it may perform, may not perform. So rather than investing rather than investing their profits to some other asset class, they have done the profit booking. This is the first reason. The
Okay.
second reason is that this war is basically happening into the countries where oil is the biggest factor. We have seen that not only gold, in fact, in this 3 months, how crude oil prices have also gone up. Correct. So whenever crude oil prices goes up, inflation goes up, and when inflation goes up, the US central bank stance changes. So earlier, uh, streets were expecting that there will be a rate cut in the year 2026. But after this war and after this crude oil prices hike, the stance have changed. Now they are planning. They are not. In fact, they are not cutting down the rate. They are in fact planning to increase the rate. So that is one big negative for gold. Whenever there's an inverse correlation between gold and interest rate. Whenever interest rate goes up, gold goes down because it is a non-yielding asset. So people would remove their money from non-yielding asset and they will invest in the yielding asset. So this is what is happening. But if war continues and see, in a scenario in a global environment where one war stops and another war takes place, which means the overall global environment is not good. Okay, even if it US-Iran war stops, there will be some new war, like how we have seen that China and Taiwan is ready to face off each other. There is ongoing war between Ukraine and Russia. So all these are factors which is benefiting gold prices. So in the history, we have seen that since 1978, gold prices have performed well whenever there is uncertain environment. In 1978 to 79, gold prices had given 160% return when there is energy crisis. Now, look at 1986, 1987, 19.5% return, 24.5% return against 14.6% return and 2% return in S&P index. That is Japanese asset price bubble and Black Wednesday 1992. Then if you look at the 2004, 2005, yesterday, Russia-Ukraine war, tariff hikes. At that time as well, gold has performed 26.6%, and in 2025, we all have witnessed 65% odd returns against S&P 500, 28.8% return and 16.4% return. So the history tells itself that whenever there is uncertainty into the market, gold tends to perform well.
Okay. Good. I have a couple of questions. With that, probably we can finish and go into Q&A. What is if you have to say one word, what is your call on gold now? Is it overvalued, undervalued, or still good to accumulate?
See, I would not say that gold is cheap, because how we have seen, just prior to 2025, we were sitting with gold. We were expecting that whether gold prices would go up to 1 lakh rupees, and right now gold is beyond that level. Okay, so I would not say that gold is cheap. And if we look at the longer term perspective and look at the current global environment, I would not say that it is expensive as well. Okay, it is just about how you play the market.
Okay.
For our understanding and for our fund view, we believe that gold is relatively fairly valued, relatively, or we can say undervalued to silver, because there are factors supporting gold prices. There are ongoing issues which is not yet resolved. So by looking at this factor, we feel that gold should go up, and it is fairly valued at this moment. And for longer term perspective, we believe it should continue to remain in a positive territory.
Okay. Good. And from your fund house perspective, what are the products that you offer in this commodity space, gold and silver?
I'm not understanding. Could you please?
No. What are the products in a Mirae Asset Mutual Fund offers in gold and silver?
Yeah. See, we have Mirae Asset Gold ETF, Mirae Asset Silver ETF. We have Mirae Asset Gold ETF Fund of Fund. We have Mirae Asset Silver ETF Fund of Fund. And one more product which we have recently launched is Mirae Asset Gold Silver Passive Fund of Fund, which is the combination of both gold and silver. So for investors who want to have exposure to ETF, and those who have demat account, they can easily go into the stock market and buy units of ETF, gold ETF, silver ETF. The expense ratio is relatively low amongst industry. We are the lowest expense ratio. We have the lowest expense ratio in the industry for gold ETF and silver ETF. This ETF is backed by physical commodity. So whenever we issue any unit, we make sure that the equal amount of physical commodity is there in the vault. Okay, that is 995 LBMS certified standard bar for gold, and for silver LBMS certified 999 purity. Okay. And for those investors who do not have demat account, they can easily go to the mutual fund route and take exposure to gold and silver through gold ETF fund of fund and silver ETF fund of fund. They predominantly invest in Mirae Asset Gold ETF and Mirae Asset Silver ETF itself. And the combined product which I'm telling is that is the back-tested model-based product which invest in by looking at the multiple factors like gold-silver ratio, momentum, and all the geopolitical issues which are going on. So we take a call based on these factors, and we decide whether to go overweight on gold or overweight on silver.
Okay. And what is the ratio of gold and silver fund? What is the ratio of gold right now versus silver in your combined fund?
Okay. So in this Mirae Asset Gold ETF, Gold Silver Passive Fund of Fund, we are more bullish on gold at this moment. We are overweight on gold. 65% of our fund is invested in gold, and remaining 34 to 33% in silver, and 2% we are having cash.
Cash. Okay. So, probably, those are the major questions that I had. Probably what we will do is right now we will open up to Q&A to our subscribers. And the investors, please put your question in the chat box, and probably, Ritesh will answer. Any questions? One more, I have one more question. Meantime, some people might have a question. So, how much is currency? Just let me mute everyone. Sorry, give me a second. Yeah, you can unmute and speak whenever. So, how much our currency depreciation? How much it has helped the gold prices?
Yeah. See, to answer this question, I would just give you the difference between the international gold and domestic gold. Okay, if you look at the LBMA gold, that is the international spot prices, and MCX gold, that is the domestic gold prices. Okay, so in 20 years, we all know that how our currency has depreciated. Okay, so if we put up this thing into numbers, the LBMA gold has given 10.78% return. Okay, against the domestic gold, which has given 15.3% return. So 5% gain we have captured in 20 years. And if you look at the 1 year time horizon, international gold has given 47.5% return. Against MCX gold has given 64.8% return. So there's a good amount of support which domestic gold is getting by depreciating the
Indian rupee. Indian rupee. Yeah. Agree. So now Nacha has asked the question. Now add gold ETF and silver ETF through SIP method or bulk. She is asking whether she should do it through bulk or SIP method.
See, for those who don't have exposure to any commodity, they should go up into the market and put 50% of their investment straight away into the gold and silver, and remaining amount should be done in a staggered manner, or we can say SIP manner. And for those who already have invested they already have exposure to gold and silver by any means, they can start SIP and start investing, because going ahead, as a fund house, we believe that say 3 years to 5 years, we will be positive. We are currently positive in both the commodities, and having said that, the fundamentals are strong, and until it goes in opposite direction, we are positive.
Okay, sure. And how it is beneficial? Kirti is asking, it will be helpful if you can explain how it is beneficial investing in gold and silver ETF than investing in direct gold Bs. So, Kirti, I can answer this question. Gold Bs is also an ETF. It is offered by one of the fund houses called Nippon. But whereas every fund house nowadays has a gold ETF, Mirae has Mirae Gold ETF, except Nippon has the name as Gold Bees. That's all. So other than that, all are safe. Any ETF you can buy. In general, I'm talking ETF or Tata fund, anything you can buy.
Yeah. Just to add to this, the ETF which you have mentioned and the other ETF, they all have the average expense ratio of around 50 to 70 basis points. While Mirae Asset Gold ETF has an expense ratio of 34 to 36 basis points. Okay, so that's the major difference which investors may get, the benefit which investors may get if they invest through Mirae Asset Mutual Fund.
Okay, okay, sure. Then there is Manivasadam. He has a question. What about international fund investing? If any international fund is open for investing at Mirae?
Yeah.
Go ahead.
Yeah, see, we have multiple global ETFs, fund of fund as well, but due to SEBI regulations, all of the international funds are closed at this moment. Nobody can, I mean, they can go into the market and have exposure to international ETF, but they are already due to lack of supply, they are already on a high premium, because we are not allowed to invest into the international market. The overall industry-wide limit has been touched.
Yeah, true.
Nobody can go into the international market
Yeah,
at this moment and invest in
certain Manivasalam, Mirae does not accept, but there are other fund houses
They are also closed, yes.
which are accepting international funds through SIP method and lump sum method. Also, you have a chance of investing through Gift City now, so that option is also available. Also, direct stocks option is also available. All these things we at Prakala are helping investors. So, for further information, you can ask our team; they will be able to help you. Anyway, with that, probably, Ritesh, I want to extend that I will leave you at 12. So with that, probably we are coming to a close and there are no more questions. Anyway, thank you for taking time on a Saturday morning and sharing your knowledge with all our investors and subscribers, and fans. So thank you very much.
Yeah, thank you so much. Thanks for having me.
Yeah, appreciate it. Thank you. Have a good day.
You have a good day.
Yeah, thank you, audience. Thank you, everyone, all the investors, subscribers, everyone. Thank you very much for being patiently. Sorry, in between the line got disconnected. Erroneously. For that. Thank you, everyone. Bye. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.